The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the November 17th, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off early, and send it to Steve at TFNN.com. Inside that subject heading, please put a radio show question. Of course, if you're inside our Tiger's Den, and you should be, well, then any ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we are beginning our day here with a sea of red out there. Dow's off 182, 27 for the S&P, 95 for the NASDAQ 100, 14 for the Russell, 127 for the transports, 43 for the semis, 91 for the NASDAQ composite, 45 for the New York Stock Exchange. Gold is off $40, silver 30 cents, light sweet crude 15 pennies, natural gas is off 9 cents, copper's down a nickel. A lot of things trading to the downside. I've got the XLV up on my screen. That's actually trading to the upside this morning. It is going to complete a TD9 count topping pattern today. Now, what we can see here on the daily time frame chart, we can see prices above its green oscillator and change line. That is a bullish condition. Prices above its new profile that formed on Friday, below price. That is a bullish condition. Therefore, its daily signal right now is neutral. What would change that? Closing below the oscillator and change line would tell us that it has lost its momentum, and that would then suggest at least a pullback to the next levels of support, either of those profiles, 145.39, 46.41, and 147.42 out there, and then profile or the breakout level of support is at 143.49. I'm not saying that is going to unfold. In fact, if price takes out the high of its pattern, which was back on November 13th. That high is 154.51. I'm assuming we don't tick above it today. You negate that signal and you move higher. You might say move higher to where? Stevie would say the weekly chart says move higher to 157.59. It's TD9 count breakdown resistance level. Now, price tested and rejected last week its swing point high, September the 6th. The volume on that swing point, 30 million shares. Last week was tested with 80 million shares. What do you think the odds were that it was telling us it would at least be back up there and test that level? So what is that level? That's at least the low of that swing point, 153.63. That's where price is headed to. If it can stay inside there, 157.59 would be the number, and all that would negate that daily TD9 count pattern. We do not have a topping pattern. In fact, the weekly negated a TD9 count top. That was back here. It actually has an A to B equals CD pattern to the upside. We're not going to draw that in at this moment in time. It does have a wave number 7 signal. Today's lower high, I should say, likely triggers that. So you could have a weekly topping pattern. It doesn't have a TD9 count. Did negate that, but I still go with 157.59 at this stage of the game, unless we see it close below that red or green oscillator change line on the daily time frame. Monthly chart, we are trading into a swing point that is a TD9 count swing point from September of 2024. 131 million shares traded that month. This month, We know we're above that. We're at 154. So even if price tests and rejects that level, that means a close below 152.23, price would still at least get back up there to test that area. If we close inside of 152.23, and we're at 152.57 right now, that would signal that we go test the high, and that's at 159.64. So that's what's going on with your healthcare sector. The XLV formed a TD9 count bottom pattern to that 10:30 on the 14th. That ran right up into resistance at the at its oscillator and change line out there. Nothing broken in the XLV, even on a 30-minute time frame as we speak right now. Now, if you do close below that TD9 count bottom, that 30-minute TD9 count bottom at 151.19, we should see a move back towards the 148.90 level. So that's what's going on with the XLV. Not that anybody asked, but it just simply showed up on my screen as having completed a TD9 count pattern out there. So I thought we'd go ahead and take a look at those charts. Let's go take a look at the equity future contracts, the daily equity future contracts. That is, we do know that the ES Mini is testing. It's trading just below right now. As of the NQ, they're testing the bottom of their daily profiles. The Dow and the Russell 2000 closed below the bottom of their profiles on Friday, closed below them in the case of the Russell on Thursday out there. The Russell has an A to B equals CD pattern that would be triggered today to the downside where they close below the low from the candle session of November 7th. That low is at 23.8660. If that were to unfold, the daily Russell 2000 would generate an A to B equals CD pattern to the downside of 23.05. The Dow equity future contract is running into a trend line resistance level. If price were to close below that, where would that be? I'd have to say today it's probably about 46.950 or so. If we close below that, we probably then are signaling a move back to the 45.605 level. I will say, though, it does have candlestick support that was established by this Three River Morningstar candle formation, so it would have a level of support at 46.574. If you close below that, then the 45.605 level definitely comes into play. Now, in the case of the Dow, this could be day number 3 to the downside out there. Typically, you get retracements, especially in bull markets, that lasts 2 to 4 sessions. We can see, however, the Dow, and let's give this an exception here, it did have one 5-day move to the downside back on August the 4th out there. So there could be another 2 more days to the downside that are unfolding here, but it should be getting ready to form some type of at least a bounce where we get a couple-day rally out of that. If we take a look at the NQ would also trigger. Oh, did I really do that? You son of a gun, Stevie. Well, I know a way to trick it. Hold on a minute here, folks. Sorry about that. I'm going to close this down, but I'm not going to save it. Close it. It's going to say, do you want to save this, Stevie? No. Now I can open them back up, and that should be right there. So I would have saved Stevie's day. Not that it takes that long to rebuild it, but let's go ahead and pull those charts back up on our screen. So the NQ would trigger an A to B equals CD pattern to the downside. That's what I was saying. As I went ahead, I wanted to expand the chart, but instead, no. Stevie went ahead and hit the X button on there. So here you'll see the A to B equals CD. It's got to close below that hammer candle from November the 7th out there. I'm going to give you that number as soon as this chart here takes full population of the screen. Okay, what are you doing here? There we go. Okay, so now the hammer candle low out here for the Dow, November 7th, 24,709.25. If price were to close below that, it would trigger an A to B equals CD pattern that would suggest an initial price target of 24,128. Before price can get through that, it has to get through its breakout level, which at 24,410. Now, on Friday, price tested negated that bullish hammer candle. If we close below the bottom of its profile today, we're trading below it as we speak out there. That's at 25,047. It just increased the odds of another run for that breakout level of support. And finally, when we take a look at the ES Mini on Friday never even got down to test that hammer candle. It tested it from within inside, but didn't test the low of that hammer candle. Closed back inside its profile, which we're trading below now, it being 67.44, 67.45. If we close below that, it just looks to me like price will go test either Friday's low or perhaps that hammer candle.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's do this here. Let's go check in on the spot VIX and the New York Stock Exchange. Its advanced client oscillator. Let's pull that open. Here we can see the spot VIX trading well above the 50-day exponential moving average. The 50 days at 1785. We're trading at 2160. New York Stock Exchange, the advanced client oscillator, still not in oversold conditions. Down around minus 109. If we did get down to the minus 150 level, then we would have oversold conditions there. Let's go ahead and close that out. I believe that. Let me just go back quickly to the daily equity future contracts. We went right into break there. I wasn't paying attention to the clock. My apology for that. So in the case of the ES Mini, again, watch that 67.45 level today. Maybe it's the intraday charts that can give us some signals. Now, on the case of the NQ out here, I do want to open up this chart. How many days have we traded lower consecutively? This would be day number 5 out there. We did get to, even in this bull run here, which typically, again, is the 2 to 4 day mark out here. We did get a 6-day run to the downside consecutively back on August the 21st out there. So this would be telling me, even if we have a down day today and then tomorrow, we should expect or anticipate a 2 to 3 day type rally out there. Now, the NQ hasn't broken or anything. It's still trading above the top of its breakout level at 24,410 out there. So that's what's going on with the that was the NQ. It was the ES. Well, it was ES also that I just wanted to take a quick peek at. So the ES today would be day number 3 to the downside consecutively. This has had as many as 5 days to the downside out there. Usually you don't. Usually you get that, as you can see where the arrows are, the 2 to 4 day moves out there. I'm not tracking 1 day moves out there, and those are somewhat worthless to us, for at least for this exercise. Let's go take a quick peek here at the intraday chart to see what's going on there. See if there's anything of importance to share with you. Is there any kind of bottom signals that we have? If you look at the 10-minute time frame chart, price would negate a Rhodes Momentum Indicator bottom with a close below 24,955 on a 10-minute bar. On a 15-minute bar, prices already negated a TD9 count bottom pattern. We're trading below profile support. That suggests lower price. The 30-minute time frame chart, a TD9 count bottom pattern was negated. We're trading below profile support out there. Actually, could be setting up an A to B equals CD pattern to the downside. So on a 30-minute basis, a close below 24,955. Let's go ahead and mark this up here. Close below that level would go ahead and trigger an A to B equals CD pattern to the downside. We've drawn in the A to B level out here. Let's copy it. Let's paste it. And now let's go ahead and assemble it. And now that would tell us that we would, if we did get that, a price target of 24,844 would be its initial price target. And I would say it'd be anywhere between that and then the low at 10 o'clock in the morning, back on the 14th. That low, that's still in play, 24,626 even Steven out there. That's the NQ, and that is for its 30-minute time frame. The only other potential bottom pattern out here is the 5-hour time frame chart is trading into the bottom of its profile, and that level is at the 24,954 level. The 120-minute time frame chart has a buy zone. The buy zone is between 24,818 and 24,947 out there. So that's a support area, not so much a bottom, but it can get back to the bottom of a profile can be. If that were to unfold, though, you would see the intraday charts 10, 15, 30-minute showing some kinds of a holding. For example, the 30-minute could hold at Rhodes momentum indicator. No, it doesn't have that. It would have to be the 15-minute chart. That's the only thing that we can hang our hat on inside the NQ. Let's go ahead and put up the charts here for the ES Mini to see if there's anything different that stands out to us. And then we'll go start taking a look at the requests. The first one that we're going to look at is really the S&P 500 and the SOX. Kind of had similar questions. One came in on Friday. My apology, I do not recall who asked me to look at the yearly chart for the S&P 500, but it was somebody who was believing that there was a bear market out there. And I did at least go into that subject matter and explained why the S&P 500 had no such signals that were present. But we're still going to take a look at that. On the ES Mini, we're trading in below daily support. We're looking for any bottom signals out here. Yeah, I don't see anything. Really, nothing at this stage here. And the only profile level of support that we're not trading below at this moment in time comes from the 120-minute time frame. It's a buy zone. It's between 66.94 and 67.29 out there. So that's the buy zone. You'd have to watch the intraday charts for signals that some type of intraday bottom has formed out there. So that's what's going on there. We can always go back to those charts and take a look at them. But right now, let's do this here. Let's in order for me to show the yearly chart, at least to not create any kind of flow issues here, so we can have a nice, fairly smooth show, is I just simply took a snapshot of these probably about an hour ago, so that we could take a look at them. And the first one we're looking at is the S&P 500, and the assumption there was that I remember I think it was like the 4-year. Also, there it might have been, I don't know if it was a 2 question, but the 4-year. The 4-year seasonal cycle, but we took a look at that just to see what it looked like out there. If we look at the charts here, the charts are the ones that are going to tell us whether or not there's some kind of top out there. When it comes to semiconductors, the question was there any kind of major top? I believe it was really the same for the S&P 500. Now, as I have shared with you, and I will share it again, I'll share it ad nauseum until everybody really gets this, is that every single bear market in the Dow, and I've gone back and looked at every single one of them, every single one of those has a topping pattern for its monthly, its weekly, and its daily time frame. So the first thing that we need to determine if we're looking for some type of major top is in fact a topping pattern. Now, the best topping patterns, I say, are the Rhodes momentum indicator signal, not because that's what I refer to it as, because that's one that really gets stretched. It gets stretched, and that's the one that can, whether it's going to the upside or the downside, in this case, we'd be looking at bear markets, be moving to the downside. But it can be a solid V point, and it can be a TD9 count top as well out there. I didn't see many wave number 7s. I did see a few, my recollection, but never like that was a predominant identification of a major top out there. Now, when we take a look at the yearly time frame chart out here, the last time we had any kind of down move, it was also formed a Rhodes momentum indicator. Top out there was a dark cloud cover 4 years ago. Out here, if we take a look at consecutive moves higher, we're only in bar number 3. We can see on a yearly basis, it makes 3-year moves, 2-year moves, pretty normal, but also has made the last 3 multi-yearly moves have been 5 periods in time out there. So I don't see any kind of topping signal on the yearly time frame. First thing. Of course, the next couple months could certainly change that. The monthly time frame on the S&P 500 does have a sell the D point top. It's got one of those. It's also got additional A to B equals CD patterns that are out there. There's several inside the S&P 500. It needs a bearish reversal candle at month's end to confirm then a top, a sell the D point. It actually doesn't even have really a sell the D. It hasn't. The S&P 500, what we've got to do is take an old A to B equals CD pattern and say it's really the one that's still in play right now. And I don't know if that's really the fact. First things first, price remains above its oscillator and change line, 65.71. At a minimum, you got to see price below that before we do some cycle analysis on it. If we look at the weekly time frame chart, there is no top here. There's no top on the weekly time frame chart. The daily does have a TD9 count top with price finding support at its breakout level. This is the S&P 500, and that was at 66.41. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Let's take a look at the Hang Seng here. This is for GTE, the Hang Seng, which has a sell the D point top for its daily time frame. That went ahead and confirmed on Friday with that bear separating candle, and today we're back below its green oscillator and change line. This is day number 2 to the downside. Likely, could be a bottom today, or you could see another couple days movement to the downside. I'd say with the weekly, it's still got a Rhodes Momentum Indicator top with price below its oscillator and change line, and you got a TD9 count top that's been confirmed. Will complete this week for the monthly time frame. Odds favor that this moves a bit lower out there. That is the Hang Seng. I'm going to go ahead and actually put up the SOX charts right now. And while those are actually preparing, I'm going to go ahead and I'll put up my PowerPoint because I also put together the SOX charts for this as well. So slideshow from current slide. Here we go. Okay. So the question, this is from Alan, and Alan was first pointing out was on the monthly time frame. And what I've done is the A to B equals CD pattern was looking on the monthly time frame. I've drawn in here on the weekly because on the monthly time frame, there's actually a larger A to B equals CD pattern that we could draw in there. I maybe had to go back to more historical time frames or terms. I mean, maybe back to 2009. I don't think it was even back to 2009. What Alan did, he started in October of 2022. I think I went back to the into 2018 to find the larger A to B equals CD on the monthly pattern, which would be 88.45. So that is still in play. Notice how price here, Alan, on the A to B equals CD. I'm only showing the C to D leg on the weekly chart and on the monthly. Notice how price on the left-hand side of both of those. That's on the strong side. When you're on the strong side, odds favor you do more than a 1-to-1. So you could do more than a 1-to-1. We already have a sell the D point top on the weekly. We're going to go back to those charts. It'll be a little bit easier to see than on this conglomeration, if you will. But I wanted to be able to more easily show you that because I think I had to put a bunch more data in for the monthly time frame, in order to show you that A to B equals CD. So, your question seems to have confirmed a sell the D point on the weekly with the bearish engulfing candle. Yeah, so we covered that. So we did. You got to get that top on the monthly time frame too as well. So we got to wait to see what happens at the end of the month. The daily time frame has a Rhodes Momentum Indicator top out there, so that is in play to the. So you got a daily top and you got a weekly top. We don't have out there is any kind of monthly top and or yearly. So we don't have 4 tops out there. That's for sure. That was a little music reference. Now let's go ahead and open up these charts. So what do you know about the SOX on the daily time frame? The daily time frame has a Gartley buy pattern. That Gartley buy pattern was tested on Friday. What should unfold here is price should rally up towards this oscillator and change line. That was at 71.17. So, Alan, to the extent that you are in bear market belief system for the semis, then what you'd be looking at is that would be the ideal spot for you to come in on a short position. And then ideally you do that on maybe a 2 to 4 day rally out there. We still don't have that yet. We're not traded above even the close of Friday out there. But you do have a Gartley buy pattern. What negates that is it closed below the bullish hammer candle. That bullish hammer candle's low is at the price point of 6888.84. If you close below that A to B equals CD pattern fails, and 62.89 looks like a decent price target. Weekly time frame chart. We showed you the A to B equals CD pattern. Again, we're on the far left. As Alan pointed out, last week was a bearish engulfing candle. That confirms the sell of the D point top. But what we also have here is we've got the oscillator and change line. Price found support at it 2 weeks ago. It found support. It was 2 weeks ago it formed the bearish engulfing candle. Last week it found support. Today it's testing support. It being the price point of 67.98. We're at 67.93 right now. So the next thing that you need to see, Alan, is price needs to be closing below that weekly oscillator and change line in order to get any kind of downside traction out there. And you can see that price has basically been above that oscillator and and change line coming off of the lows out here from April the 11th. We finally got above it on the weekend of May 2nd, and we've stayed above it ever since. So this is more of a Friday than a Monday element out there, but it is something for you to pay attention to as well out there with regard to the semis. If we take a look at the monthly time frame out here, the monthly time frame, you can see here's the completed one that you were showing. It needs a Rhodes momentum indicator top. Again, it is in wave number 7, letter G. So if we don't get a higher high this month, it doesn't look like we will, but not a guarantee out there, you could have a wave 7 top. But again, my studies have not shown wave 7 to be that ultimate topping pattern out there. If we did get a bearish reversal candle and we had a top on a daily, weekly, and monthly, then that says, okay, time to be careful. Now that be careful could be what was earlier asked of when I was talking about the S&P 500, could also be the early sign that a bear market could begin. So you have to take things one step at a time. For example, we can't just go ahead and back up the truck and sell the house on the weekly chart, knowing that it's got a top out there, but we haven't seen it close below at least the oscillator and change line out there, and then knowing that the daily's got a Gartley buy pattern. Pretty strong a set of signals out there. So the first thing that has to happen is levels have to fail. Monthly's got to first produce that bearish engulfing a candle or some type of bearish reversal signal out there. And then what would likely take place is price would pull back. It's a lot of P's out there. Pull back to its oscillator and change line. The current print on that is 60.98. Not until we get that candle formation can we even come up with an estimate of what that figure might be. So on the stocks, again, you got that. Our bear market signals present? Only if we get a bearish reversal candle on the monthly time frame. But that assumes nothing changes between now and then. And everything changes between now and then. So I hope that answered your question, Alan, and whoever asked about the S&P 500 on Monday. And if they didn't, write back into me or let me know, and I'll make sure that I'll get that data out for you. Duncan Steve wants to take a look at Marvell. So let's go take a look at Marvell. MRVL is the ticker symbol. I think that might be here. I think I got them screwed up this morning. Here we go. So we take a look at Marvell, trading out at 84.62, below the bottom of its daily profile. This could be day number 2 below it. The more important level to be watching, though, perhaps today, is going to be the swing point from the trading session November 7th. That swing point was 20 million shares. The low was 85.11. We're trading below that now. So that's triggering an A to B equals CD pattern. Is it with volume? I don't know. We'll go see what kind of volume we've got. But what that was, 85 million shares. Let me just copy and paste this here. Let me go ahead and move it over. And the A to B equals CD pattern has got around the 81.17 mark or so. The B point, today's volume so far is 3.6 million shares. Again, that's going against 20 million. Oh, it's 20 million shares. Nowhere near that kind of volume. Doesn't matter. If you still get a close below that swing point, it's going to trigger an A to B equals CD pattern to the downside. Now, what could get in the way? The first thing that could get in the way, Duncan, is the weekly oscillator and change line. So you've got support at 83.22, whereas the daily has a topping pattern. The weekly does not. So the weekly is just pulling back to support, as is the monthly, which is its oscillator and change line. So you're sitting at support. What you'd really like to see here, I think, over the next few days is for Marvell to complete that A to B equals CD pattern, get down to its initial price target around 81.17, and then form a bullish reversal candle to generate a Gartley buy pattern. That was ticker symbol MRVL for Duncan inside the Tiger's Den. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're looking at the stock charts here for QBTS. This is for Duncan Steve inside the Tiger's Den. So, Dunk, you're going to complete a TD9 count bottom pattern today here in the bar following bar number 9. Price should rally up towards resistance. The first resistance level, 27.54. It's a slightly bullish structured profile. So, in order for QBTS to tell us that the rally is something other than a counter trend move, you would need to see a close of 29.78 out there. At a minimum, you should rally towards 27.54, likely the 29.78 area. It's being supported, if you will, by the weekly chart, which does have a Rhodes momentum indicator top, but last week's crush to the downside found support at the bottom of its daily profile, 21.53, a relatively balanced profile out there. So you've got a bottom on the daily, potentially a bottom on the weekly, and the monthly chart, you know, the thing that doesn't look great here is we're trading below last month's low. I don't know if we're going to hold that. If we do, it would signal to Stevie that we're likely to go target its oscillator and change line around 17.48. But you've got a daily bottom that has formed out there with weekly holding profile support. So the monthly is going to come along for the ride. So that's what I see with regard to QBTS. In other words, the monthly trading below the last month's low may really not hold up through the end of the month out there. Mohammed wants to take a look at VRTX out here, so let's go pull that set of charts up on our screen. We've got VRTX trading out right now at 437.10. That is above the top of its daily profile, so that's a bullish signal. It took out a swing point that had formed on October 23rd and had volume of 1.76 million shares. 1.76, that was taken out with 1.6. 1.2. Today we're at probably about 1.2 as well. So we don't have the confirmation of volume, but it doesn't matter. You've got the confirmation of an A to B equals CD pattern to the upside. So let's go fill in those data points out there. Let's just simply move that A to B point over to the C point, the next lowest low that forms after the B point out there. And that's going to give you a price projection around the 462-ish level out there for Vertex Pharmaceuticals. On the weekly time frame chart, trading above profile, you're only in bar number 8 this week out there, which is not at a high. You could get a TD9 count top between this week and then the next 2 out there. And finally, on the monthly time frame chart, we have a close above the bullish structured monthly profile at 414.94. It's telling me that it wants to make a run for 467. That's its oscillator and change line. So you got 462 on the daily, 467 on the monthly. Nothing to stop it from rallying on the weekly other than a trend line. So if we take a look at this, is something else for you to be paying attention to, I would say. If we take a look at his trend line out here, well, shoot, if it come down to there, is that? Yeah, that would actually work. So there's that trend line. I put in a trend line. That could be an area where you would also find some resistance out there, Mohammed. So I hope that helps you out with regard to Vertex. GTE wants to look at his favorite position, which is XPEV out there. So let's pull that up on our screen. XPEV, I believe, is trading lower today. It is. And what it did was it tested its buy zone, GTE. The buy zone is between 22.74 and 23.42. Now, you close the day below 22.74. Problem. You close tomorrow below it as well. You'd have a daily profile change in trend. And that would be signaling to move back towards the 20.01 level. It's daily TD9 count breakout area. The weekly time frame last week formed a Rhodes momentum indicator top. It already had a TD9 count top out there. What it hasn't done, though, is it has not gotten down below support. Yes, it's trading below its weekly oscillator and change line, but the profile is right below that level at 22.70 out there. So XPEV found support at 22.74, bottom of its daily profile, 22.70, top of its weekly profile. Those are levels that price needs to close below to signal to you and I that it wants to head to lower price. Now, it would say on the daily time frame it would head to 20. The weekly was saying 19.69 out there. It has a weekly buy zone, by the way, between 18.18 and 19.69. Monthly chart not doing a whole lot out there. So I hope that helps you out with regard to XPEV. You also wanted to look at the Hang Seng out there. So let's pull those charts up on our screen for us. Hang Seng should be trading. Oh, it didn't do it. Okay. We're going to call an audible here. I'm going to come back to the Hang Seng just in case it happens. I can do that during the breakout there. So let's go take a OKLO. This is for hot dog. HD. This has got an A to B equals CD pattern on the downside. Not that it's been confirmed by volume. Meaning the B point, the trading day of October 22nd, 34 million shares. It was closed below with 12, 15, 13, 12 again, 16 million, but that was at a close below. Let me make sure. That was 34 million. So it has triggered an A to B equals CD pattern to the downside, not with volume. We're trading below profile support. That puts one in the check mark box for let's go do the A to B equals CD. By the way, approximate price projection, not right to the T, around 72.40 area. But the weekly chart, which has a Rhodes momentum indicator top, closed below profile support last week, trading below it this week. Well, then I say that daily A to B equals CD price projection really does come into play in that 72.40-ish area out there. Monthly time frame chart. At a bearish shooting star last month, you're having follow through this month. Trade below last month's low out there. We haven't traded below last month's low really since the last time that we did that was back on the trading month of March of 2025 out there. So this is suggesting that I may want to go target its oscillator and change line. So the daily's got 72.40 potentially. The weekly, we don't have a number on that. And you got 75 in essence right now on the monthly chart. So it does look like that's what Oklo wants to do. So thank you for that, HD. And we want to go take a look at the 30-year Treasury right now. So let's go do that. This is for John. He wants to look at both the 30-year as well as the TLT. So let's pull up that 30-year Treasury first out here. And the 30-year Treasury shows on a weekly time frame you're consolidating with inside his bullish structured profile, having formed a TD9 count top. That TD9 count top on the weekly base got support at 116.04, resists up at 118.27. The daily time frame has a TD9 count top and a TD9 count bottom. So in order for the 30-year Treasury to really move to a lower price out there, you must see a close below the low from November 5th. And that low, 116.11. If we get that, you'll also be below the bottom of its, you won't be, about 163, 116.04. So even though you get below, let's say if you did get to 116.11, you got to get that below 116.04 number to really suggest. Now, the weekly chart could be set in A to B equals CD, or the daily chart could be setting up an A to B equals CD pattern to the downside. We close below that TD9 count bottom out there. So it would look something like this if we were to get it. I'm not saying we're going to get it. we can get anything, but this is the pattern that is potentially in play out there. So we'll just simply move that over. The reason we want to take a look at that is if we just looked at the TLT, that may already show that this is the pattern that's in play out here. So this would get us down in towards about the 114.19-ish level. And that's coming from the daily time frame chart. Let's pull open the TLT right now. And the TLT, does it have us trading below that swing point? It does not. It does not. So the TLT still has a daily TD9 count bottom pattern. But if price were to close below that low, that is at 88.88, the TLT would trigger an A to B equals CD pattern downside. Weekly chart is holding support. It's a buy zone. It's between 88.83 and 89.21. And you're consolidating on a monthly basis as well. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Just kind of surfing around the intraday charts during the break there. You've got a 15-minute set. I've got the 15-minute set of time frame charts up on my screen, and the ES Mini and the NQ are the ones that have that bottoming pattern, both with Rhodes Momentum Indicator bottoming patterns. In fact, their charts look so similar. Now, both are also approaching their TD9 count breakdown resistance level. So let me go ahead and open up this chart here. If you wanted to grab a copy of it, now would be a good time. And where price is pointing to is, it looks like it's taking on profile resistance at 67.60, 760.75. We're trading above it. Trade into a swing point. Where it has resistance is at another resistance level, TD9 count breakdown, 67, 77, 25 out there. Watch that area. If price closes above that, then the ES mini should target 6,850. But that is your resistance point, and it held, by the way, was tested at 10 o'clock this morning. Let's go take a look at the NQ out here. The NQ's got the same thing going. We are trading above profile resistance, 25,126. Likely to go target, which also found resistance. It's TD9 count breakdown resistance level. 25,203.50. Let me make sure of that number. 20. Yeah, 25,203.25 out there. 25,203.50. If price closes above that, we're likely to get a further rally. That further rally would take us up towards 23,536. Now, we don't have any synergy here. And what I mean by that, I would have preferred to have seen the same patterns on the 15 chart for the Dow and for the Russell 2000. We didn't get it. But I think it's the ES and the NQ right now. In the case of the Dow, by the way, you don't have that bottoming signal, but it does have a TD9 count breakdown resistance level. So write this number down as well, 47,239. So if price closes above that on the Dow, again, at least for its smaller 15-minute intraday time period, it would be telling you about a further rally. Otherwise, right now, price is just running right up into TD9 count breakdown resistance levels. Folks, stay tuned for all the great programming. I'll be back with you tomorrow on Terrific Tuesday at 11 a.m. sharp. Have a great day out there. Be safe. I'll see you back here later this afternoon with Tommy at about 3:15. Take care now.